Okay, welcome back. Today we're going to deal with the Debtors and Creditors Control Account. It's a 60-mark question, and it's similar in some ways to the higher level question, except a lot more straightforward, I would say. Now, I suppose the one thing to say, just to show you what you're given a whole load of figures of things that happened during the year and some balances, and then you're asked to prepare a debtor's ledger control account and a creditor's ledger control account. So there's no schedule of debtors or schedule of creditors, it's just the control accounts. Okay, so for that, I've just very briefly prepared this beforehand. This is going to be our debtor's ledger control account. It's going to be a simple T account, and this is going to be our creditor's ledger control account. Now, what we do with the information in here and how it differs, I suppose, from the higher level question is there's really almost no calculation to be done in the debtors and creditors control account question. All you really need to do are two things, or what you need to know are two things. You need to know for each one of these entries whether it goes in the debtors control account or the creditors control account, and which side of the debtors control account or the creditors control account it goes on. So it's those two things you just need to know using these figures. No calculations as such, except for this one, which is a very straightforward one where you have something like purchases or sales, which include cash purchases or cash sales. You take off the cash element just to get the credit purchases. That's really the only calculation. So what I would say is the first thing, excuse me, that you might do to solve one of these or to do one of these questions is to identify all of the entries that go in the debtor's ledger. And once you've identified all those entries, then you might decide which side of the debtor's control account they go on. So I had started making this video earlier before I was interrupted, so I've started again here. The first two here, I'm just putting a tick next to the first two here. They're the debtor's ledger balance debit side, debtor's ledger balance credit side. They're obviously debtor's control account entries. Okay, the next two, creditor's ledger, they're definitely not debtor's control account. Returns outwards are purchases returns. Now, that's not a debtor's control account, because if we just remind ourselves briefly, the debtor's control account is all about debtors. Debtors are people that owe us money, and they owe us money because of stuff that we sold to them, goods that we sold to them. And when I say we, I'm saying we are Mary Burke, goods that Mary Burke sold. So the we, when I talk about myself, or when you talk about yourself doing it, you are this person here. Okay, so if it's all about amounts of money owed to you and people who owe you money and sales, then purchase returns has nothing to do with the debtor's control account. Okay, discount allowed. Well, that's a discount that you allowed to somebody when you sold goods to them. So yes, that has to do with sales and money that's owed to you. Discount received. That's a discount that you received when you purchased goods. So no, that's not anything to do with debtor's control accounts. Purchases, no. Returns inwards are sales returns. Well, if it's to do with sales, yep, it definitely has to do with the debtor's control account. Bills payable accepted and bills receivable issued. So these we might talk about more in the future, but bills payable is money that you need to pay out. So it has to do with purchases, it has to do with the creditor's control account. Bills receivable is money that's owed to you or you're going to be receiving. So that has to do with sales that you made and money that was owed to you. So that is in the debtor's control account. Now, just for the time being, all I'm going to say is that bills, whether they're payable or receivable, if they're receivable, they're the debtor's control account and they always bring down the amount owed. If they're payable, they're creditor's control account and they always bring down the amount owed. Next one, sales, definitely. Discount disallowed to Mary Burke. Now, as I said already, we are Mary Burke. So if there was a discount disallowed to us, then it must be for stuff that we purchased, isn't that right? Now, if it was disallowed by us, it must have been sales that we made and we gave somebody a discount and we allowed them a discount and then we disallowed it again. But if it's disallowed to us, then it's for purchases. So that's not for this debtor's control account. Checks received from customers, that is for the debtors control account. If we're receiving money from customers, it's for sales that we made to them. Okay, check paid to suppliers. No, we pay money to our suppliers for purchases that we make from them, so no. Checks received dishonored. So first of all, checks received, that's definitely for sales that we did, and dishonored, well, we'll decide what that means in a moment, but bounced checks basically that we received, but that has to do with the debtors control account because it has to do with sales. Bad debts written off. Again, those are for monies that were owed to us and we've written them off as bad debts, but money owed to us has to do with debtors and sales. Interest charged by Mary Burke, so by us on overdue accounts. So it must be interest that we charged people that owed us money. So that's definitely debtors again. Transfer from debtors ledger to creditors ledger. This is how they write at an ordinary level. This is really a contra entry is what it is, and so it affects both the debtors control account and the creditors control account. So what I'm going to do is I'm going to put a special note next to that because we're going to use it twice, once in the debtors control and once in the creditors control. Debtors ledger balance at the end of the year. So we had our two balances at the start and they give you a debit and a credit balance at the start and just a credit balance, it says here at the end, and by balancing the actual T account you'll get the debit balance, but this certainly will be using in the debtors control account. And that's it. So we can see if we can pop those 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 items into the debtors control account, then we'll have that finished, that part A finished. Okay. So let's start off with, first of all, the balances. So debtors ledger balance, debit side, 75,800. Now, if we remember, debit side is this side, credit side is this side. I might as well put it in both, debit side, credit side. So the debit balance is balance brought down, and we see here it is 75,800 on the debit side. Okay, the credit balance in the debtors ledger was 410. Okay, now if you like, at the start of some of these, since it is on the 1st of the 1st 16, you could put in a date there, but we don't have dates for any of the others, so it's really not essential to put in the dates here. Okay, so that's those two. Then working our way down through the list, the first thing we had was discount allowed rather. So if we allow a discount, it reduces the amount of money owed to us. And remember, for a debtors control account, anything that reduces the amount owed goes on the credit side. Anything that increases the amount owed goes on the debit side. So we allow a discount, it reduces the amount owed. 560 goes on the credit side. 560 discount allowed. Okay, next one, returns inwards or sales returns. Well, if somebody returns good to us, then that reduces the amount owed, so that 310 returns inwards, or sales returns if you like, goes there. Next one, bills receivable rather issued, 5840, and I told you bills always reduce the amount whether they're going into the creditors or debtors control account. So 5840 bills receivable, isn't it? Okay. And then we've got sales, including cash sales, 8,200. So we don't want the cash sales included in this. This is only about money owed to us. So if somebody bought stuff using cash, then they don't owe us money. So cash sales have no business being in a debtor's control account. So if I subtract the 8,200 from the 101,600, I get, I'm going to say 93,400. So 93,400, and it goes on the debit side because, and when you sell, it increases the amount owed to you. Okay, I'll do one more and then I'll have to go on to the next video. Checks received from customers. So if we received 80,300 from our debtors, that means they don't owe us as much anymore if they paid us 80,300. So it reduces the amount owed, 80,300. And we say if it was checks received, we just say bank. Okay, maybe I'll do one more. Checks received dishonored, 1,800. Well, some of those checks that we received bounced, so we'll put that. That means they still owe us that money, so that's going to increase the amount owed again by 1,800. And we'll say dishonored checks. Okay. And next one, bad debts written off, 750. Well, if we're going to write off a debt and say, oh, they're never going to pay us, I'm going to strike that from the amount that's owed to me, well, then it reduces the amount owed. So 750 here, bad debts. Okay. And let's see if we can finish this off. Interest charged by Mary Burke on overdue accounts, 100. So Mary Burke, or we, charged our debtors €100 interest. That means they owe us an extra €100. So that increases the amount owed. So it goes here. Interest. Okay. Where were we? Transfer from debtors ledger to creditors ledger. That's that contra entry. And contra entries always reduce the amount owed as well, whether they're in the debtors ledger control account or the creditors ledger control account. So again, 320 reducing. So it's contra we put it in as. Okay, and then lastly we've debtors ledger balance, credit side 450. So we're going to put it in on the debit side because when it becomes the balance brought down, we'll put it as a balance carried down on the debit side, and when it becomes a balance brought down, it gets brought down to the credit side. So 450. You can put it directly under it or just down a bit if you want. Balance carried down 450, and then we're going to tot that up. Now I'm just going to tot that up after I stop this video, and we'll start the next part, the creditors control account, in the next video.